Hey guys, today we'll be looking at the petty cash fund. Firstly, what is a petty cash fund? Petty cash is an amount of cash kept on hand that is used to pay for minor expenditures. For example, this might include the purchase of office supplies or postage for small mailings. Now that we have an understanding of what petty cash is, let's take a look at the steps involved. Firstly is the establishing of the fund. Secondly is making payments from this fund. And thirdly is replenishing the fund. Now let's look at step 1 in more depth. To establish a fund, a business will write a cheque for the amount of the fund, cash the cheque, and then place that cash in the care of an employee. Suppose that on May 1st, Sally's Cafe cashes a $100 cheque to establish a petty cash fund. This is then given to her employee. On this date, Sally would record the following journal entry. Petty cash is debited and cash is credited, noticing that there is no change in total assets. Now let's move on to step 2. Once the fund is established, we must figure out how to make a payment. This can be done in 2 ways. Cash be taken directly from the fund, or employees can be reimbursed for payments they made with their own money. In all cases, it is important for custodians to collect all receipts as no journal entries are made. Finally, how do we replenish the fund? This is done through a replenishment report. In a business's replenishment report, total receipts should equal the amount needed to replenish the fund. This is seen in Sally's Cafe report. When all expenses are accounted for, Sally cashes a cheque for $75 to replenish the fund. She would then record expenses as follows. The entry increases 3 expense accounts and decreases the cash account. Because Sally records the expenses resulting from the fund, the entry decreases both assets and equity. So what if the required replenishment amount does not equal total receipts? This could be due to incorrect change or the inadequate collection of receipts. This discrepancy is recorded in the temporary expense account, cash over and short. The account can either have a debit or a credit balance. To demonstrate, let's say in Sally's report the amount required to replenish the funds is higher than the receipts. This means it is cash short. The $2 difference is charged to the cash over and short account as a debit, indicating an increase in expenses. Thanks so much for watching. Hopefully you learnt something new about the petty cash fund. Make sure you stop by Sally's Cafe sometime soon. Coffee's on us.